Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Paul Anthony, founder and CEO of OpStart, a full stack accounting and finance solution for startups. Paul, I'm so excited to chat with you and get to know you a little bit more, not only as a startup founder, but also your invite into other startups as that's kind of your main clientele and your main services. This podcast is about building companies and the different challenges they face. So I'm really excited to see kind of your perspective and your lens throughout this process. But before we get into OpStart, what were you doing before you started the company?
Yeah, thanks for having me, Julian. I'm excited to be here and for the conversation. Before OpStart, I started my career in finance. I was initially in investment banking, focused on software companies, then moved into VC, where I was with a later stage fund, leading kind of Series B through D rounds. And after that, I took my first leap into the founder space and was a co-founder and CFO of a tech nonprofit called Puente, which is based out of the Dominican Republic. And my experiences really in those last two jobs in particular are what led me to start OpStart.
Yeah, the Dominican Republic. What landed you there from? I think Chicago you were at before, and then now you're in Indiana. What were you doing in the Dominican?
So one of my roommates from college and best friends did the Peace Corps out of college. And we were on very different tracks with me working in finance and him being in the Peace Corps. So it was always fun to stay in touch and kind of compare notes. But I ended up visiting him a couple of times, really loving the work he was able to accomplish down. And as his time in the Peace Corps wound to a close, he had a really great idea for a technology solution that could allow international development to function more smoothly and efficiently and be more locally led instead of driven by donors and funders. So I moved down there to join him and start that organization. And we built it up into a very good organization that's still doing awesome work, where our tech is used to power international development in 9 different countries. And we do a lot of stuff ourselves in the DR that I'm very proud of as well.
Yeah, it's incredible to see the whole. Well, also, it's just incredible to see that startups have a place everywhere. And as long as you find a problem and can use technology to offer a solution for whatever reason, it's really agnostic to where you are in terms of the location. What's interesting to me is I've had a lot of founders who come from a finance and investment banking background and having that kind of, I think, deep insight into the mechanics of what makes successful startups successful. And in your opinion, and through your experience, what advantages do you think you took away from that prior work experience, but also what, in your opinion, makes startups successful?
Okay. Second one's a really loaded question. I'll start with the first one. So what I took away from investment banking, I think if I had to summarize it in sort of one sentence, it would be what it looks like to really be kind of an A player. There are a lot of jobs and roles that you can get out of college that are much, I would say, probably easier, softer entry points into the working world. And in investment banking, you really are in a extremely type A, no excuses, no mistakes environment, for better and for worse. It's a job that a lot of people hate. So I'm not trying to deify it by any means. But if you are looking to move on to become a founder or do other things in your career, it can be nice to have that foundation of what A+ work looks like and set that right expectation for yourself from early on in your career.
Yeah. And what's that A work look like? And if you, obviously it's a loaded question, but what are some few examples that I guess you would try to I guess, in your company now?
Sure. Well, I mean, the examples that are top of mind for me are a lot of things that still relate to what we do that I think about sort of in our instance and really for any business. The way you communicate with customers is really important. The standards you should have for any materials you're delivering for customers or what solution you're building for them should be really high. Getting things 90% right when you're in school gets you an A-. And then when you're in the working world, if you're starting your career in investment banking, it gets you fired. So just carrying on that mentality to say I know that this is hard. It's supposed to be hard, but we have to hold ourselves to the standard of perfection is something that I think I've taken from it.
Yeah. Yeah. And describe the inspiration behind OpStart. And of course, I think a lot of founders who listen to the podcast know that when you're building and when you're solving a problem, you tend to think about the accounting and the financial component and operation component as kind of an afterthought, like, oh, well, I guess I have all these assets and material and now I've tried to find it, organize them. But what inspired you to kind of take it from a more practical and systematic view?
Yeah, afterthought is a good word. We call it a necessary evil sometimes. Like no one wants to start a business so that they can keep their books and file their taxes. You just have to do it in order to do the thing you actually wanted to do when you set out to start it. The inspiration behind it for me was really twofold. It started when I was in the VC world, and as an associate in that capacity, my role involved getting a lot of data from companies. So first during the diligence process, tracking down all the data we would need to check our boxes from an accounting and legal standpoint, calculate the metrics that we cared about from a more strategic standpoint to look at the health of the business. A lot of times I found that founders just didn't have the data we need or couldn't produce it in a consistent enough and clean enough format. And there were deals that I specifically remember that we had to pass on that would have ended up being very good deals, but we passed on them because we couldn't get enough data to get comfortable. And that ultimately, I think it was the right decision, even though it ended up being the wrong one from a financial standpoint. Once we would invest in companies, I was the person that was in charge of bothering founders once a quarter to ask them for updated metrics on like ARR, net burn, and maybe one other thing. And they were simple requests, but it took a very long time to turn around. It would often involve hopping on late at night, and it was a bad use of time for me and especially for the founders that we backed. So I always felt like there had to be a cleaner way, and that there was clearly some noise behind the scenes that I couldn't really appreciate as a non-founder and someone who wasn't in the trenches with them. After that, when I went and was the co-founder and CFO at Puente, I kind of gained a new appreciation for those problems that I saw more downstream as an investor. You really have to be so disciplined and organized from day one in order to produce good, clean data that investors will require 1, 2, 3 years down the road, which is difficult when you're trying to wear all the hats that a founder has to wear. And on top of that, there was this whole other side of running a finance function that I really had no appreciation for, which is the compliance elements of it, where you have to figure out which taxes apply to your business. And that's not a straightforward answer in many cases. You have to figure out how you're going to file those taxes, who you could pay to do it, what a good market price for that would be. You have to figure out whether you could pay people as employees or contractors. If you're hiring someone in a new state in today's remote work world, right? You have to figure out how to file the right forms with that state in order to remain compliant and have that person on payroll. You have to reconcile your books at a very regular cadence, once a week, once a month, something like that. Otherwise, it's going to be really burdened. You have to figure out the right software to select for all this stuff. It's this really niche, guarded area of expertise that most founders just kind of grit their teeth and try and fight through in their first few months and first few years in some cases. And we think that that's kind of stupid, right? Because when you're an early stage company, and I think any angel or pre-seed investor will tell you this, you're kind of betting on the horse as much as anything else. And you're taking a founder who you think is really good at solving a specific problem and betting that they can use their time to solve that problem, or at least create meaningful progress in order to get to that next round. So if you're wasting 5 hours a week, 10 hours a month, more than that, whatever it is, on trying to solve these back office, niche accounting, finance, tax type of issue, that's all time that could be going towards more important work. And that's really valuable assets being wasted through the lens of your startup company.
Yeah. It's so interesting because a lot of founders talk about this fundraising process and the due diligence as well. And it seems as though your numbers don't have to look perfect, or maybe not even like good, but they have to have some kind of story behind it. And from what you're saying is a lot of founders may not have that, or it's a difficult process to get any clarity into that. How much, in your opinion, are founders leaving on the table in terms of the amount of funding they could get, or the backers that they have and who don't want to work with them? How much do you think of being left on the table?
Oh, it's really incalculable. It's very hard to say. I think the common things where you see people leaving a lot of money on the table, the obvious ones are things like a lot of startups don't realize that they qualify for R&D tax credits, right? And those on average for customers that we work with is about $50,000 a year in savings for them. That a lot of companies just forget and leave on the table, right? There are the other things we catch where it's like, hey, you've been paying this vendor twice of what it says in your contract. Or you didn't make a payment on your credit card because you just weren't monitoring it, and now you're incurring interest on that. So those are the little operational things you catch. But I think the point that you were getting to, which is the bigger one, is those things are easy enough to quantify. The thing that is impossible to quantify is if I had been keeping track of my financials more closely and keeping them in a more clean format, would I have had the ability to close my round sooner? to close it at a higher valuation, to realize that I'm not on track to hit my milestone and make adjustments sooner so that I don't have to raise like an extension round and can still manage to get to my Series A instead. That type of stuff is remarkably important. You'd be shocked at how often the simple blocking and tackling of back office execution allowed you to optimize decision-making on fundraisers.
Yeah. It's so fascinating. It's just time and time again, I hear this recurring theme of, and especially with multi-founders, about setting up the foundation of the company is that much more important, especially not only with fundraising, but with actually measuring outcomes and making adjustments on strategies and things like that. When you're building an accounting and financial software, who are the different partners that you have to whether collaborate with or reach out to? And how do you attract those partners to help kind of keep you in compliance, keep you with understanding the regulatory requirement? Sure. What is that process like in terms of gaining that, I guess, advisory pool that founders may not know of and may need a little bit of a piece of advice to help kind of move that process along?
So there are a couple things that come to mind here that are relevant to mention. I'll start with some things that are specifically relevant to OpStart in this industry that we're playing in, and then some more broad stuff that might be applicable to any founder. Historically, if you look at financial and accounting software programs, and I'll say accounting software in particular, a lot of people have built solutions that are supposed to be targeted at founders and ended up having to sell them to accounting firms. So QuickBooks, probably the number one example that people can think of. QuickBooks is initially built as a way for small business owners to easily keep track of their own books. It has the guardrails of making sure you follow accounting rules with the simplicity of just choosing a category for your expense. Great idea in theory. In practice, founders didn't want to learn how to do their own books, right? Founders didn't want to figure this out on their own, and there's still way too much they can screw up. So QuickBooks ended up being a tool that you would provide to your accountant, your bookkeeper, and they would manage it on your behalf, right? Started off targeting founders, ended up selling through accountants as the main users. BotKeeper is a really good example of this. That's a more kind of current startup, right? I think they're Series B or C range based out of Massachusetts, really good company. They built a algorithmic robotic bookkeeping platform, essentially, that they thought they could sell directly to founders as a way to cheaply keep your books reconciled. In reality, just having the algorithm that gets the work done wasn't enough, because founders wanted the ability to ask questions and say, hey, why did my expenses jump so much in this category? Why did my revenue drop last month? I don't remember losing any customers. There's always questions that you need to ask. There's always information that an algorithm can't pick up. And when you talk earlier about sort of telling the story behind the numbers, anything you do that's purely software is not going to be able to tell that story, at least to this day, right? So we built this, we built OpStart intentionally from day one to be a combination of software and humans. We call it a function as a service instead of software as a service, where you get a best-in-class software suite to manage your accounting, tax, finance needs. You also get a controller who's dedicated to your account, who's going to keep your books, who's going to be able to answer questions for you, who's going to be able to dig into topics like figuring out if this tax filing is applicable for you or not. And we found that founders are much more interested in a solution that takes the problem off their plate and solves it for them outright than something that makes it marginally easy for them to do it themselves.
Right. Yeah.
I was going to say, taking it, I guess, more broadly into what partners are important for us and how we think about engaging those partners. In our space, the accounting, finance, back office world is pretty fragmented with a lot of different software platforms that you need. You need a different piece of software to keep your books, to handle your payroll, to pay your bills, to manage credit card spend, so on and so forth. And there are also different providers involved. So you might have some outsourced HR function. You might have a CPA who does taxes. You might have a fractional CFO. We're trying to consolidate that as much of a one-stop shop as we can possibly build. But it's helpful for everyone in that space to maintain good relationships with one another, because you can't do everything perfectly. So in our case, we have partners on the HR side, on the fractional CFO side. We partner with some software providers we think really highly of. So it is one I'll mention that you should look at if you aren't aware of them. But all of those companies help us ensure that we're doing the best job possible and also send us customer referral volume.
Yeah. How important is it in regards to your product and what you're building to stay kind of in a tight relationship with your customers? How much are you learning from them day to day? And what are the questions you're asking to build a better solution for them?
Yeah, I mean, it's of the utmost importance for us. I think everything we've done from day one has been extremely customer driven. When we started the company, really, we did pretty much everything manually. And I did most of it myself in order to pick up sort of really what it's like to be in the weeds with all these different companies. I had done it with Puente, my last startup, right? And been in that person in the weeds, but that's just one data point and I needed to get a lot more. After we had done that for maybe 6 months, we felt like we had a pretty good playbook in place and we started to firm up our processes around things, make them more standard, and then layer in technology to automate as much of it as we could, make it very visible, make it very dynamic. But all of it is driven by the questions that customers ask us, the requests that their investors have come diligence time, the mistakes that you make along the way. You just have to learn from every one of those things and make sure you're trying to figure out how to solve it moving forward.
Yeah. I'm so curious because you come from the VC world and the investment world. Would you say that helped you when you were raising your round of funding, and how better off do you think you were opposed to the average founder in terms of raising money?
I definitely think there are advantages to it, especially having been in VC or on the investment banking side where you're sell side, right? You're pitching companies as M&A targets. You understand a little, I think I have a good understanding of what investors are looking for and why, right? I remember what we had to look at for diligence as a VC firm. So now as a founder, I'm sort of front running that and thinking about what VCs are going to ask about and question us on before I get to the meetings. And that ensures that you're not really caught flat-footed as much and that you have good answers for everything, even if it's not necessarily a strength of the company.
Yeah. Tell us a little bit about the traction with OpStart. How exciting was the recent growth that you've had? What are you excited about this year? How many people are using the platform, and how many do you expect to get to by the end of the year?
Yeah. So we are just over 2 years old now. We kind of went live with our first customers in January of 2021. We have a little over 70 active customers on board. Those are all startups ranging from pre-seed through Series C who pay us a monthly flat fee to manage their books and some other back office operations around that. Yeah. From a sort of traction standpoint beyond that, we grew over 150% last year. We're hoping to beat that this year. We raised a seed round at the end of last year, which is going to allow us to invest a little bit more in the growth side and in the product side, so we can continue to operate more efficiently and enhance our margins and to grow more intentionally.
Yeah. I'm always curious to talk to founders about kind of their pricing structure and how they figured out how to charge their clients and the relationship to have with them. What made you decide to go through a monthly kind of subscription model versus a one-time fee or something kind of in between that? Was it from your customer's request? Was it something that would keep the business operating? What did you consider going through that process? And then what ultimately helped you decide to have, say, a monthly subscription model?
Yeah, no, great question. And I think in our case, there are some factors that make it a little bit more unique than other kind of flat SaaS companies because there's that human service component to it. Yeah. But from day one, we knew we wanted to generate monthly recurring subscription revenue. I had done some freelance work as a fractional CFO for startups in the past, and that project-based work can be pretty high margin, but it's totally unpredictable and it's tough to build a business around that. You don't really know how many people you can afford to hire and what your P&L is going to look like next quarter or next month. As an investor previously, I understood the value of having a really recurring, predictable revenue base and not having to go out and re-win your book of business every year. So that was something that I felt was important early on. And we always knew we wanted to have a monthly subscription model for what we were providing and focus more on that than any short-term project work that might be available to us. Yeah. But in terms of pricing, I mean, we definitely made mistakes early on and I think are still under optimized to what we could be doing. For our first customers, we tried to just set a flat price with kind of no frills or caveats or considerations on top of it, which is great from a customer standpoint. The problem is we have a human service component to what we do. So if you happen to work with a company that sort of underestimates how much help they need, and it's not always intentional, it can just be they think it's lower than it really is, whatever it is. We were running into instances where we would lose money on a good portion of our customers. And then we'd have to go to them and ask them to double or triple their monthly price with us. And the only justification was like, well, hey, we're losing money. You got to do it or otherwise we're dumping you as a customer. And that didn't seem like a very clean way to do it. So what we ended up layering in is somewhat of like a retainer component to our fees, where for your monthly price, you get a maximum number of support hours from our team. And if you end up needing more support than that, that's great. That happens. If it's fundraise time, if it's tax season, whatever it is, there are instances where you're going to want us to do more and you're okay paying for that without renegotiating your monthly plan. But we just need to charge you some excess fees per hour if you happen to need more support than usual in a given month.
Yeah. It's that conversation. I've made a mistake as well. And it's really just the expectation setting. People understand if they use more, they have to pay more. But if it's not clear, it's a little bit more of a difficult conversation or a little bit more of a challenge to communicate the increase the value that you're having to offer them with the services and the human component. So yeah, definitely made that mistake ourselves. Thinking about OpStart, what are some of the biggest challenges that it faces today?
So today, our main goals for this year are developing more of a tech-centric user experience. So keeping humans at the core of what we do because it's so important for providing clients with that peace of mind, but allowing those humans to be a little bit less involved than they are today, where you can do more of the work yourself and still feel fully informed and empowered without actually requiring as much time from our team. So that's definitely a key thing. I mentioned that from a growth standpoint, we're trying to grow more intentionally and predictably. We had a great benefit of getting through our first 2 years as a company without really investing in volume growth. Almost all of our business came from inbound referrals because our customers and the investors who backed them and others in our space just thought we did good work and were comfortable recommending us to their friends, fellow founders, other portfolio companies, so on and so forth. But that's really unpredictable growth. We didn't know month to month whether we would get no referrals or 10 referrals. And we have to hire people in order to support our customers. So we need to grow more predictably in order to hire at the right time. And alongside that, we just want to grow faster, right? So for all those reasons, we are excited to invest a little bit more in growth. We want to keep retaining our people and giving them long-term career paths here that keep them happy. We want to keep validating our unit economics and scaling our revenue a lot faster than our expenses. So it's going to be a big year.
Yeah. Internal referral network in that whole kind of engine or machine, it's very challenging. You know, it seems like you do good work, you have a good relationship, and then you get requests and you maybe get a new partner. But what in your opinion needs to happen for your client to trust you and refer people to you and new business to you? Because it sounds easy, but it's actually way more difficult than it
Absolutely.
seems. What has been helpful for you to
I don't think I have the code cracked on this, but the pieces of the things I've learned that I think are most important here are, number one, you have to give yourself a lot of at-bats because there's not a formulaic way to determine whether someone's going to be a really good referrer for you or not. What I've found is that it generally comes down to a combination of their circumstances and their personality. So some people are just naturally very connective. They want to help people in their network. They want to be the one who refers a solution to you that solves a problem for you and it makes them feel good about themselves. So they will actively refer anything they feel good about, right? It's like, it's the Yelp reviewers of the business world, if you will, right? They really care about giving their feedback and passing it on. Yeah. If you can find people like that and keep them happy, then it's very meaningful for you. For what we do, right? Yeah. That means that if you happen to find a VC who's really passionate about this solution and who has a big portfolio of companies that are in our kind of target customer size range, then that's a really good referral channel for us. But if you look across all the VCs we have relationships with, 90+% of them just aren't hands-on enough or involved enough to where they really care about recommending this much. They might recommend it once or twice if a company asks them for advice, but it's the 10% of people who are willing to just email their portfolio companies and say, I really think you should look into this. This is a great solution. Let me know if you need any more details. Those are the ones that drive the volume for us more so than the other 90% that just kind of have us in their Rolodex. Same thing for customers. Yeah. Like we tried financial incentives and they're still active with both VCs and customers for us where, you know, if you're a customer, you get some discount on your next bill when you refer us a new customer, and that person, the new customer, is going to get some discount as well. For VCs, they don't care as much about getting the financial incentive themselves. So it's just a bigger discount to any portfolio companies they refer to us. We generally found that those were impactful to a pretty small degree. Again, they may have nudged a couple people to give referrals that wouldn't have otherwise done it. It's a good excuse to get on people's radars, but ultimately it doesn't help you figure out whether someone is going to be that type of prolific, active connector who really drives a ton of volume for you. And I think that's true for pretty much any startup
Yeah.
Some of the accounting software providers that we partner with, they'll tell us, right? Like it's just so hard to find a like-minded firm who really gets what we're doing and wants to promote it. And we say the same thing back to them, right? Because not all companies are created equal when it comes to being referral channels. People just have a natural gene for it or they don't.
Yeah. 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 If everything goes well, what's the long-term vision for OpStart?
The long-term reason why we started this and what we're hoping to accomplish with it is we have a vision of making entrepreneurship easier for everyone. So I mentioned early on that I think what we do is really it's a necessary evil. If we can remove that necessary evil for every founder and small business owner in the United States, I think you can see a lot more people that feel comfortable starting companies that don't run out of steam early on because they make mistakes on this front or don't have the capacity to handle it. And people that make progress more quickly because they're not wasting so much time on this.
Yeah.
So it's a grand vision, but I really love to be the go-to solution.
Yeah.
It's like getting a bank account when you start a company or filing your articles of incorporation.
Yeah.
Bring on OpStart and you can go straight to building product and talking to customers and doing that more fun strategic stuff while we take care of all that necessary evil that's involved.
Yeah. Here's some lightning questions coming at you, which I always like to introduce these to founders, but here's a few for you. What's particularly hard about your job?
What's particularly hard about my job? At the building culture with a remote team.
Oh, yeah. Yeah. How do you do that? What mechanics or what do you schedule events? Do you have recurring value sessions? What do you do in particular that you think is keeping and maintaining the culture?
What we've done is mostly a combination of recurring touch points with different groups on the team so that you do feel involved and connected to everyone you're working with, even if you're not really on a project with them. Combine that with, I think it really comes down to hiring as much as anything else. If you can hire people who you think get along with everybody else on the team, then that culture can develop organically. And we did that in large part we partnered with a company called the Mom Project for our hires. Their talent pool included a lot of stay-at-home moms with accounting backgrounds who wanted to do, part-time work while their kids were at school, basically, or something to that effect. I'm oversimplifying. But as a result of partnering with them, a lot of our accounting team exhibits some of the same characteristics, has some of the same life experiences, and they all get along and really form wonderful friendships that's nothing I did made that possible. But, if you hire people with the culture in mind, then you don't have to think as much about it once they're on board, I think.
Yeah. If you had more time to allocate into one particular part of the business or your life, what would you want more time to do?
Business-wise, I would love to be able to just create an extra 2 hours a day where I can purely kind of pursue long-term strategic projects and, go through brainstorming to prototyping and be able to sketch out what's worth time and what's not. Because I don't have that time. It soaks up too much energy from our team. And I think it would be something I'd love to make more progress on my own.
Yeah. Yeah. If you weren't working on OpStart, what would you be working on?
I think it's really hard to say right now. I love what I do so much. I love working with all these different types of founders. I have a skill set in this realm that's useful to them. I'd probably be doing something that involves being an advisor or resource for founders and investors, which is really what I'm doing now. So I guess hard to say.
Whether it's early in your career or now, what books or people have influenced you the most?
Wow. Great question. So, people wise, I can think of the managers I had earlier in my career and different things that I picked up from them. There was one of my direct bosses at my first job ever was as good of a lead by example guy as I've ever worked with, where there was nothing that he would ask you to do that he wasn't willing to do himself and sit with you and do in the trenches. And I try to carry that mentality now to everybody I work with at OpStart. Right. And then, thinking through my second boss in VC was much better at just clearly outlining, here are our goals, here are how we're going to know whether we met them or not. And I'll help you brainstorm sort of good ways to think about metrics to get there. But it was much more strategic, high level, just here's the mission, here's how we're going to know if it's working or not. And I think you need to kind of combine both things in order to be a great manager when you're building an early startup.
Yeah. Yeah. It's amazing to hear. And it's so exciting to hear not only the progress, but also the maturity that your company has. And it obvious is from experience, it's from your background. And also it's awesome to hear the level of service that you're offering other companies. And it almost like this cohort of companies that you're working with in terms of your clients are going to be that much more prepared for their growth and their scaling. I know we're coming close to the end of the episode here. It's always like to give our founders a chance to give us your plugs. Let us know where we can find OpStart, LinkedIn, Twitter, where we can find you, where we can be involved, where even we can use the product or be a fan of it.
Yeah. So our website is opstart.co. We're going to have a fully revamped website coming out in a month or so. So stay tuned for that, but feel free to check out what we have now. In the meantime, you can fill out the contact form on their website and it's going to hit my inbox and I will personally respond to you and let you know if we can be helpful. If you want to, cut half the items off your to-do list as a founder, that's a great first step. We are on LinkedIn, Twitter, all of the socials. Typically, if you look up OpStart or OpStart Growth, you can find us there. I'm personally on those networks as well. Just my name, Paul Anthony. It's a good thing to search to find me there, and love to connect with anyone else who's kind of in this broader industry and working through similar problems.
Amazing. Paul, it was amazing to have you on the show. I really hope you enjoyed yourself, and thank you again for joining us today.
Thank you very much. I enjoyed it too, Julian. Appreciate you having me on.
Of course.